CoreWeave stock is down roughly 20% after reporting earnings, unfortunately brought companies like Nebius down roughly 6%. Then we're also getting updates from Nvidia that they might be delaying their Rubin thanks to competition from AMD, causing AMD stock to jump up over 5%. Now, are these rumors true? Let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
Right, so first, let's just start off here with CoreWeave, ticker CRWV. They did report earnings yesterday, and the stock today was down roughly 20%, sitting at $117. Now, if we kind of take a closer look at their quarter two at a glance, $1.2 billion in revenue, up 207% year over year. Revenue backlog was up 86% to $30.1 billion. Capital expenditure was $2.9 billion. But overall, we can, and adjusted EBITDA, if you kind of care about things like that, $753 million. I know the reason I say that is I know a lot of investors say this is kind of like fake numbers, as you can kind of put anything to adjust it, but that was 62% of margins. Regardless, the company is still at a loss, but that 207% year over year growth is definitely something to keep an eye out. Now, in forms of quarter three guidance, the company did give about $1.3 billion in revenue on the top end. And if we do look at the numbers in quarter three of last year, they did about $600 million. So this quarter is, or the guidance for this quarter is expecting another kind of 100% or triple digit year over year growth, which is pretty impressive. And I do believe for quarter four, they're also going to see another triple digit year over year growth. Now, in capital expenditure, the company did kind of give us about $3.2 billion at midpoint, but for the full year, capital expenditure is somewhere between $20 to $23 billion. Now, they also did increase their revenue guidance by a bit, nothing too crazy. But what I want to mention is, first, if you are an Nvidia investor, capital expenditure seems pretty heavy for a small company. So this is kind of another great company that's going to be buying from Nvidia chips. In the first 3 quarters, this company is going to be spending about $7 to $8 billion in capital expenditure at most. Most of that capex is actually going to happen in quarter four, which is most likely when this company is going to have a lot of their power shells available. And power shells are going to be the data centers that have power solutions ready for them. So quarter four is most likely going to be somewhere around like a 15 billion capital expenditure for them, which I think is going to be wild for companies like Nvidia. Now, things look pretty impressive, but why was the stock down? So obviously, it could probably just be the overall excitement for the stock. We do know since the company went IPO'd, it's gone up still almost 200% in the past 6 months, right? And that's from the IPO price of somewhere around $40. So if you got early, obviously you're still up almost on the triple bagger, on the 3-bagger there. But we can see from the peak that the stock is down roughly 35%. So I think it was just a little bit of the excitement. Luckily, we did cover a little bit about that prior to the earnings in the CoreWeave earnings preview. Unfortunately, not many people watched that video. I guess it wasn't that exciting. But we can also, the market, what is the market saying? So the first thing is estimates on losses were wider than expected. I honestly don't think that was a real issue. The other thing is that the company was maybe expecting stronger guidance given the stock's massive surge since going public. I mean, still kind of showcasing a 100% year over year growth for quarter three. I don't know how much crazier you can go from there. But then the other thing is on Thursday evening, we are expected to have the lockout period expire for this company, and that can kind of create more volatility. So maybe some investors might be trying to escape before that, because obviously, I mean, if you haven't been able to sell shares, if you're an insider and you see the valuation almost more than tripled, why wouldn't you want to sell shares, right? Obviously, I could see a huge incentive in such a short amount of time to sell shares for CoreWeave, and maybe investors are a little bit worried about that. Now, I do have, and this is the great thing, right? We're here, you're not going to get any type of analysis like this anywhere else. So here are 10 questions that came out from CoreWeave that I think every investor should know. I'm only going to take a closer look at three, but if you are a member of this channel, you do get all these links for free, so you can kind of check out the other ones. But one of the first questions was kind of a talk about the sovereign AI market, right? What is this kind of doing for growth opportunities? And CoreWeave does mention that many sovereign AI nations are actively seeking best-in-class technical partners. They even mentioned that they have already found success in this arena through partnerships in Canada with companies like Cohere. So, and they're expanding, their ongoing expansion is also going across Europe. Now, they mentioned that, however, certain places will be less welcoming to US-based providers. So, interesting notes to say there. But the first thing that we're hearing is sovereign AI is definitely a very bullish case right now, which is something Jensen Huang has been talking for a very long time. Next, the other thing, and like I mentioned, all these charts, you can find them if you are a member, but they're also mobile friendly, so you can even look at them on your phone pretty easily. PowerShells, the primary bottleneck. So when asked about supply constraints in the AI infrastructure space, many people think is GPUs, and the CEO mentions that, yes, this is a supply constraint market where you have everything, right? It's still a form of supply shortage, but the biggest bottleneck is powered shells. And for those that are not familiar, power shells are data center spaces that are fully equipped with the necessary power and cooling infrastructure. And that is the biggest challenge. One of the main reasons, right, the company said, you know what, maybe we should go out there and buy cores, right? They have plenty of power shells and are building power shells that we will be able to enhance or throw in our GPU solutions. So we can see this is a structurally supply constraint market. Accessing power shells capable of delivering massive scale is the most significant challenge. And this is why maybe a few months ago we did hear Microsoft CEO said, you know what, we're no longer chip constraint, we're power constraint. And this is exactly what it means. This is the hardest thing to get into the market right now. And this is why companies like Nvidia are making sure they're also trying to help out the overall power solution market as well. Now, there's actually two more questions I want to take a closer look at. So we'll look at four. This is kind of a question of, hey, what's your expansion over, what's your philosophy over renewals? So when asked about contract renewals, CoreWeave revealed a unique business philosophy that challenges traditional enterprise sales models. We generally don't focus on the concept of renewals. We focus on the concept of expansion, right? Because renewal means that you're just going to be using the same amount over and over again. Hey, I only want 100,000 GPUs for the next 3 years. A renewal suggests that, look, I'm going to want 100,000 GPUs next year or after my contract. What they're saying is, with this AI development, and it's going such a rapid pace, it's not about renewals. It's about expansion, upgrading that expanded footprint. And they see it with companies like OpenAI, right? You kind of get X amount of compute right now, but by next year or 2 or 3 years from now, I need that compute to be even larger and larger. So they are kind of an expansion over a renewal philosophy. The final question I want to look at before we kind of move on to Nvidia, there was a question about how to maximize their assets. And one of the biggest bearish theses for CoreWeave is they expand their life of GPUs to about 6 years, maybe even a little bit longer, where companies like Nebius do it for 4 years. And the management actually answered that really well. They mentioned that the GPUs are getting form of a second life, that the company is successfully recontracting its older but still powerful H100 and A100 GPUs. The A100 GPUs, and this is something that Jensen has been talking about for a while, that GPUs are still being used like the Voltas, but the Amperes are, I think, about 5-6 years from now. GPU clusters are still being recontracted after their initial contract expires. And these GPUs are primarily repurposed for inference workloads, which are less demanding of the absolute latest technology compared to cutting-edge model training. And contracts for the second life hardware are being signed for 1 to 3 years extensions. Some contracts, like the ones with OpenAI, have structures that could extend the total useful life of the hardware up to 7 years, demonstrating a long-term sustainable approach to asset management. So I think that is amazing. And it kind of showcases that NVIDIA's products are going to be living for a long time. And as long as you keep needing innovative technology for the most advanced chips, NVIDIA is going to be able to sell both older models, newer models, and the data center runners are going to be able to make money from older models as well. Now, definitely, if you want to learn more, I mentioned as well. But if you want to help out the channel a little bit more, make sure to hit the subscribe button. I'm trying to hit 75,000 by the end of the year. Also, check out my free newsletter, whatthechip.happened.com. Now, let's pull up here on Nebius. So Nebius was down about 6% on the day. I would say I think I am a Nebius shareholder right now. I am a small shareholder. I purchased a bit after earnings. So my cost basis is about $64. Now, I am going to say I think these earnings, CoreWeave earnings, shouldn't really have impacted Nebius too much, especially since Nebius just reported about a week ago. So it's just more of a market sentiment shift right now. I don't believe it should be a bearish case for Nebius because I don't think there is anything scary from CoreWeave that Nebius has. The only thing I would say that maybe might be scary is Nebius investors might be waking up that yes, Nebius does have a way stronger balance sheet than CoreWeave, but what happens when Nebius starts to expand dramatically? How much is that balance sheet going to start looking like that massive debt that CoreWeave has? So maybe I wonder if that could be also a thought process happening right now, but overall, I don't see anything from CoreWeave as a bearish case. I don't see that as any competition, a heavy competitor. The market is just so big right now. It's just so big. And that's why this company was able to grow 200% year over year. Now, I want to jump into Nvidia because this one kind of shocked me a little. So Nvidia was down roughly 0.85%. We did see AMD up about 5.3%. The biggest thing that's impacting both these companies is there were reports that Nvidia's Rubin, its next generation GPU, so the one that's coming after the Blackwell Ultra, slated for late Q2 of next year of 2026, is possibly delayed due to redesign purposes. And the main reason for these redesign purposes is because it wants to be more competitive to AMD's MI450 series. This is all just based on some discussions happening with an analyst. More importantly was this. Importantly, we think it's very likely that the Rubin will be delayed. The first version of Rubin was already taped out in late June, but Nvidia is now redesigning the chip to better match AMD's upcoming MI450. Also, we think that Rubin chip will likely hit 2,000 watts per chips compared to 1,800 when it was announced earlier. So just because of certain design aspects, they think that it's going to be delayed. Now, we can see that Seeking Alpha, based on here right now, they kind of reached to some spokespersons at NVIDIA, and NVIDIA dismissed any delays to its Rubin timeline. The report is incorrect, said an NVIDIA spokesperson. Rubin is on track. So I think that overall ends that bearish thesis, in my opinion, yet the stock is kind of very excited about this. Now, I do believe the MI400 series is the biggest bullish reason for AMD. That's the reason I'm in bullish for their AI space. I could care less. Maybe I could care. But the MI350 is really the first stepping stone. The MI300 sucked balls for AMD. But after that, the MI350, I want to say, is the real stepping stone. They're getting some traction. But the MI400, which is going to start with the MI450 series, is going to be the real powerhouse. The main reason is this. This is going to be the first time AMD is going to be able to connect 72 GPUs together. Now, for those that are not familiar, in the inference space, for inference, which is where AMD wants to lead, the biggest moat to being an inference leader is the ability to connect a lot of GPUs together because you have kind of this unified memory. It doesn't matter that AMD's MI350 has better memory than one Blackwell GPU from NVIDIA, because NVIDIA could say, I could care less that you beat me on a 1-to-1 ratio, because I can connect 72 GPUs together and make that 72 GPU look like one GPU. You can only do that by 8. So my memory capacity is much, much higher than yours, which is super crucial for inference. Now, the MI400, starting with the MI450, this is the first time AMD is going to do this. It's going to be able to connect 72. So that connection is no longer a strength for NVIDIA, at least for the Vera Rubin. So obviously, I'm very excited for the MI400. Now, for my NVIDIA bulls, I want to say, sure, the Vera Rubin might seem some competition, but I believe NVIDIA is going to pull something completely different here that might kind of make this even a better product than the MI400. But what I think is crazy is, sure, you might have caught up to NVIDIA with the 72 in the second half of 2022. NVIDIA has been running 72 GPUs since late 2024 with the Blackwell and the Blackwell Ultra here in 2025. NVIDIA says, look, by the second half of 2027, we're not only connecting 72 GPUs, we're connecting about 576. A game changer, a real game changer here for NVIDIA in the Rubin Ultra platform. Now, for AMD, will it be able to catch up here on 2027, or will just the lead continue here for NVIDIA? So yes, the MI400 versus Vera Rubin are going to be very, very close. But what's going to happen is, what does AMD do next? Will it be able to combat this Rubin Ultra, which is going to be a whole different beast compared to the Rubin platform? And this is going to be thanks to this Kyber rack, where they're even flipping. We can see kind of they're flipping the trays on a vertical, on a horizontal aspect, right? No, vertical aspect here. Just so they can fit a lot more GPUs here. So as an NVIDIA investor, I really wouldn't be worried. As an AMD investor, obviously excited about the MI400, but what comes up next is definitely a very, very crucial question to ask. The next topic that we have is, we have finally gotten some updates. The Trump administration says that they will use NVIDIA's 15% China H20 GPU sales tax to pay down debt. Now, I'm not a huge fan about this. I would have wished that they would have used this to kind of increase AI infrastructure investments and make US a stronger AI player. That would have been my better, if I was running the place, that's how I would have done it if I was doing that kind of mafia tax. The final thing I want to talk about here for NVIDIA is, reportedly, US authorities are tracking AI chip shipments to stop them being diverted to China. So many people were kind of misrepresenting this topic. It's like, hey, US government is putting actual chips on NVIDIA chips to track them. That's not what's happening. What seems to be happening is, and we don't know if it's US officials, because obviously companies like Supermicro, like Dell, they need to be responsible of where these products are being shipped. It wouldn't be impossible for them to be putting little trackers, think of it as maybe like an Apple tag, not necessarily an Apple tag, but a form of tracker on random shipments to make sure they're being shipped at the right places, because then they can go, hey, look, we have been doing our due diligence. We're even putting certain trackers on the box themselves, not on the actual chips, to make sure things are being located to, are being transported to the right place, and there's nothing fishy going on. So nothing scary here, in my opinion. I wouldn't think this would create any backlash on NVIDIA's products, on AMD's products, or anything. I think a lot of these companies are just worried that they might get, hey, look, you've been sending chips to China. We're going to sue you, being the U.S. government. So if it's not the U.S. government just putting it on random shipments, I do believe it's most likely kind of like these third-party players that do sell kind of some of these AI servers. They're also making sure that's not happening by adding some of these trackers. Again, this is nothing happening directly to the chip. It's more of the shipment box. And I'm pretty sure when you're shipping these massive server solutions, there's a big containers, so you can just put them somewhere inside the container, somewhere inside the shipping solutions, just to make sure you can say, look, I did my due diligence and I made sure nothing was going to anywhere funky. So I hope you guys enjoyed today's update. Again, if you want to support the channel, thumbs up, subscribe button, and if you become a member, you're gonna get a lot of great content, like some of these websites that I am designing. And any more websites you want, just let me know on the comments below. Take care, have a good day, and see you all next time.